I should have made a video last night, but I did not. I noticed something interesting. It was almost midnight when I was looking. I changed my S&P 500 chart into a weekly chart, and I noticed that there is a head and shoulders, depending on how you look at this, on the S&P 500. Last night it was somewhere around here, and I was looking, trying to figure out, well, is this the neckline? Let me just throw a line here. Is this supposed to be the neckline? It's not quite even. Doesn't always have to be either, right? Is that it, or are we going to drop in the morning or at some point and visit this? So the question was it going to look like this, right? Is this the other shoulder and dropping like Bitcoin did, right? It had a very short shoulder. Or is it going to look more like this, where it comes up, it has this is just like a quick fake out, builds a new neckline and starts to work its way back up to about this 4,500 range before it really makes a fall. And I just wanted to point this out. So we don't know if that's going to be the case, but either way, this doesn't look good. So I think the only thing that can save the market right now is the Fed coming in, saying they're not going to raise interest rates, something like that. And I say save the market. I mean, this market needs to tank. That's the reality of it. This is a bubble, right? It's just funny money. So I had this purple line down here, and I thought this was kind of funny. This has been here for quite some time. I think I put this here back, I don't know, September, something around there, looking for areas that there may be some sort of support that we could fall to. When we first started to have this sell off, I thought, oh, maybe this is the one here. You can see a small head and shoulders here, but it just continued to go up. So I put these lines down here. I do have more other support zones that you can see. But looking at this, I thought, well, I think that 3,700 range is very realistic, somewhere right about here, 3,716 to right about here, 3,806. And now, of course, the last few days, I'm hearing all these big wigs on the news talk about they think 3,700, that range is that number where the Fed will finally say, well, we're not going to raise interest rates like we thought. It looks like the market already got beat up. And I just thought that was kind of funny that, oh, well, maybe they're watching Define Finance. I doubt it, but it means we're on the right track here, most likely. What we'd ultimately want to see, which I think is definitely increasing probability wise, is this 3,400. You'd want to see the last major support be the old high that we had before the pandemic, right? If we get to that point and stop and continue to bounce, I would say we have found support. But there's a lot of crazy stuff going on in the market right now. So let's just do some quick measurements here. From this point, we're only down almost 10%, right? It's not a big deal. Okay. This is where they say, oh yeah, it's just a correction. You have that side. Of course, we're hearing a lot more people coming out saying, yeah, this is definitely going to go down. We have the Fed, we have Russia and Ukraine, right? We have now people are wondering, is something going to happen between China and Taiwan? What is going on? There's a lot of reasons for this to fall. But that first fall down to here, that's just the beginning of bear market territory, right? We've seen this 20% fall over and over and over again. You get to the zone, and what do they tell you? Oh, this is great. The market's reset. Now it's time to buy, which could happen, right? It's psychology from here on out, right? These markets are so overpriced. But you do have people rotating into value now. So if they're rotating out of these into value, places that pay dividends, they're getting out of these high flying stocks, the, 300 PE ratios, and they're moving into more realistic items. Now, this has been carried from this point on. This area has been carried by, the heavier weighted stocks like Apple. A lot of the stocks within the S&P 500, they look like this, right? They're going up, and right around here, they're going like this, and they're actually already down 20, 25, 30, some of them 40%. They're already down. right? So it's just those heavier weighted stocks had been moving so much. It's a fake out. It makes it look like overall everything's doing so great, but a lot of these are getting beat up way before we got to this point, right? But let's take another look here. There's a lot of calls out there right now. Um, this would be considered a crash, 39 or 30%. It's 29, but we'll call it 30%. Is what they would consider traditionally a crash. They'd say, "Oh no, we hit, 30%. What's going to happen from this point?" And that's where you start hitting different variables. You don't know. I mean, that could just be it, but you could be at the beginning of that level. So this might be a fair area of support or going down a little bit lower. These are areas right now. There are calls out there. Some of them are from gold bugs, and I can see exactly why they're talking about this. Some of these heavier weighted stocks in here, their PE ratios are high, right? So they have a huge delta. It's basically like this. Here's a high flying stock. Here's where their PE ratio and their earnings really are, which means at any moment this could start to sell off and come back down to a very realistic level where you'd want to buy. Now, something else to keep in mind here right now is if we look at the RSI. Okay, we've broken our midpoint, so I would say we're probably going to continue trending down. Now, what we want to see is this midpoint here now going to become resistance? It has once. If it does, that means we're continuing to lose strength, and we have to consider that this may have been that other shoulder. So again, I've been saying this now for a little while. I think it's time to be moving out. I was talking about it back here, start pulling profits on the way up. When this dropped, I didn't think it was a time to buy, continue pulling a little bit of profits, continue pulling profits on the way down here. And I would be rolling into value funds, which I was in before this. I was in well before um, this point. I ended up selling out of my value, somewhere around here. They had done well, but they started to have this downtrend, and I moved a lot more of my money into crypto at that point. Some of them turned out to be a really, really great play, and I'm waiting to see where am I going to move it. Still holding oil. That has done really well. The dividend's great. But I think we are at that point right now where the question is, was this just a short little fake out and we're going to build a new shoulder from here? Like this is the true neckline of this head and shoulders that's coming? Or which means this, again, this can continue from right here. Or is it going to bounce here, create another head and shoulders or another shoulder here where everybody thinks, oh, look, the market's, see, it's recovering. Everything's great. Boom. We hit this line somewhere right around this range, somewhere between 4,400 and 4,500. And all of a sudden, boom, we come right back down. It's possible, I know it's just like Madden football here, but it's possible that you end up like this too. What if this is a rounding top? Remember what happened with Bitcoin, right? So maybe this bounces back up. We clear this shoulder point, or it looks like it's going to be a head and shoulders, bounces back up, we double top, right? You have a double top here. That's a potential. Or we could continue going up, bouncing around here for a while, and you see how long this is getting? All of a sudden you have that rounding top happening, and one day you wake up and boom, this thing's falling through the floor. So that's a possibility too. I think there's a lot of things that are against the market right now. I don't think the Fed is going to not raise rates at this point. I think they know they have the market doing what they want, so they're going to continue. I think there was a report out that they're jawboning. Basically, they're happy with the market results, where the market is responding the way that they wanted. So, I mean, that just shows you what they're up to. They're trying to get the market to come down because they believe asset prices are too high. And Powell said that, Jerome Powell. So we know what they're up to. They're trying to get these prices to come down. They're trying to use that as a way to fight inflation without actually having to raise interest rates. right? They're trying to beat that number down by crushing some of these stocks, getting people to freak out, stop spending their money. So when elections come in, they could say, oh, look, see, inflation's now 6%. It's on its way down. This isn't a big deal. That's what they're trying to do right now. We'll see how it plays out, though. Anyway, I don't know where you're watching this video from. I am recording it from TradingView, so other people are sharing these around. But make sure you comment on these. There's other people watching. You guys can have conversations about them. If it pops up and there's an ad, watch an ad. This is free content that comes out for everybody. So watch an ad. They kick down some money to keep these types of things going. Anyway, I'll get back at you when I have new information.